Hello there, it's Richard Lloyd from MINEXIA, the 100% owners at NR Private Market. As you know, NR Private Market is a platform-based funding solution for earlier stage exploration and mining development projects, which is now branching out into fintech and green tech also. We thought we use today by giving a little bit of a 10-minute webinar for our issuers and our investors alike with AFEX. We've been working with AFEX for foreign exchange solutions for the last 3 or 4 months. Initially on the investor side, where potentially you were investing sterling into a Canadian deal, for example, and finding that high street rates were too high. So we enabled that facility and that dynamism to assist and lower the cost of our investors. We then realized that obviously the issuers could benefit from this benefit as well. And with low cost FX transactions, cross-currency transactions, and strategy around their FX planning as they develop their projects. So this has grown with the pair of us, and AFEX now supply strategy discussions and the graphs and actual trades to the mining companies themselves. So I'm joined today by Alex Wright, who's an FX specialist. He's our client manager of all our clients, of all MINEXIA's mining clients. And also Trevor Charsley, who's the senior market advisor at AFEX. He's been trading for 25 years and is often quoted in the UK press, including the Financial Times, Daily Telegraph, and all the rest of it, and also commentates on Bloomberg. So let's kick off with Alex. Alex, firstly, do you want to tell us a little bit more about AFEX and specifically what you do and how you found working with us?
Absolutely. Thanks, Rich. So for the last 40 years, AFEX have been working with clients, not just across mining, but across every imaginable sector. And today we do that out of 22 global offices. But whoever we're working with and wherever in the world we're working with them, there's typically 3 broad pillars of activity for our client work. One is transactional. So we take one currency, we turn it into another, and we deliver it somewhere. We typically do that cheaper, faster, and more efficiently than the banks. The second is hedging and risk management, which is a very large part of our business. And we use very simple tools like forward contracts all the way through to more complex derivative products to essentially flatten out the volatility inherent in the currency markets, which allows our clients to forecast better and allows them to control costs and ensure that their predicted revenues become actual revenues. And the third pillar of activity is small for us, but constantly growing, which is sort of fintech technology. We use market-leading APIs to help our clients who make large volumes of transactions, make them frictionless and without human touch, and which drives down cost and error rate as well. And that's essentially what we do, as I say, for all of our clients across any sector, and then tailor it to each individual client's needs.
Okay. Yeah, I mean, it's the fintech side. Obviously, we're trying to use disruptive financing, and linking with you guys has been very, very well appreciated by the investors. I mean, I guess me investing into a Canadian dollar deal is relatively straightforward, my sterling. But how have you found working with our clients? So I think for our issuers in the mining industry, where they're thinking longer term, what's my strategy with the US dollar? We all live and breathe US dollar as a currency in the mining industry.
Absolutely. Well, look, I've really enjoyed working with people in the mining industry, I should say. They're certainly nearly always interesting individuals with lots of good war stories and so on. But it also allows us to sort of look outside our normal currency crosses. You know, as a company, we do a lot of sterling dollar, euro dollar, sterling euro, as you can imagine. But obviously, the nature of mining and where a lot of the world's resources are, you know, it allows us to, or allows me at least, to do more sort of East African shilling and Malawian kwacha and help you grow my skill set. And I find that interesting. And one thing I enjoy about my role here at AFEX is you get to gain a deep understanding of a range of industries, and our work with NR Private Market and MINEXIA allows us to do that.
Yeah. I mean, moving on to you, Trevor. I mean, Alex is right. There are certain currencies that we all live and breathe, I say, in the mining industry. US dollar being the primary one, but and then the other drivers being, South African rand is a local cost. The gold is still sold in US dollars, Aussie dollars, and Canadian. How can you give us an idea on how those, what you call, pair with sterling for most of our listeners? Probably thinking sterling also.
Yeah, it's very interesting. I mean, to start off with, I think the markets, we're in a dollar weakening trend at the moment. The Federal Reserve, because of the pandemic, has really cut interest rates. So there's no real premium to holding dollars anymore, from 2.5% to basically flat for dollars. And this has seen the dollar come lower. When you can see that the rand has got 3.5% interest rates, and obviously that's attractive for investors on that side, as long as they can look at the actual economy as well. So interesting times. The market as well, let me just get some charts up here, is very much, there we go. Can you all see that, gentlemen?
We did see it, and then you just taken it down.
How about that one? Can you see it now?
No. There we go.
No. You've got it all back, have you? Did you
Yeah,
see the chart? Okay, all right, gentlemen. Right, so let's look at sterling rand. Now, obviously, at the moment, we have Brexit talks coming in, basically. So that's going to be very interesting, and really it will be down to the Brexit talks as to what happens with sterling rand. But in actual fact, as far as forecasting and looking at all of these currencies pairs, there's something when you hedge currencies called forward points, a phenomenon basically. And essentially these occur when hedging between two different currencies with divergent interest rate levels. And those interest rates are set by obviously their respective central banks. As we suggested, the rand has a higher interest rate than the UK pound. So, to understand this, so that you can imagine really when comparing interest rates to your savings account, the higher the interest rate set by a central bank, the higher yield that currency provides when hedging. So the interest rate differential manifests itself in terms of points. So that's how it's all calculated in the forward FX price. So if the currency you're buying in a hedge has a higher central bank interest rate level compared to the one you're selling, such as the rand, such as against sterling, then you'll achieve an improvement on the market price up to the value of those points. Now, obviously, when looking at inflation around different economies, they have exceptionally high central bank interest rates, let's say for Kenyan shillings, etc. So, and when we look at sterling Kenyan shillings on a 12-month hedge, you actually get an additional 510 points, which in percentage terms is 6% improvement on the market price. That means your cost price can be driven down by 6%, and that allows you to do more with less investment. So on the other way around, when you're repatriating profits from the emerging market currency into sterling or into dollars, when hedging the opposite direction, you get the reverse outcome. So points off the rate and a worse rate. However, what we would say that due to the huge rate difference on the purchase price, you can actually leave the repatriation to the spot market, which is the value today or today's market, because you've already got built in a huge buffer of volatility to ensure your profit margins remain protected and you can achieve those investment returns. And obviously that's what we're all about. So, as you can see, we're suggesting here that, sterling rand should come lower. And I think we've got targets on sterling rand around about 1967, 1903. And looking at sterling Australian dollar, depending really, Brexit will have an effect, but in actual fact, we still consider sterling Aussie to go down to 177, 173, 173.50, something like that over the next few months, primarily because the emerging markets are doing very well. China's picking up, so the Australian dollar's picking up, and of course the UK has got Brexit to go. So here's an example of the forward points, and you can see that if you sell something forward, if you Sell sterling and buy Kenyan shillings forward for 3 months, you get 80 points improvement. For 6 months, 260. 9 is 480. 12 months, you get 700 points. That's really good improvement, and you can obviously, layer your investments over that sort of 12 months if you wish, and then you can gain on your investor returns.
Trevor, I'm a humble geologist originally. I sit on the board of a couple of mining companies, and I obviously run the platform. But I'm certainly not an FX specialist. Apart from perhaps when I go skiing, maybe. So as a CEO or as a CFO of a small mining company or even an exploration company, they're not generally going to be FX experts, and they get a bit wary, I suppose, about, oh, you must do this, and if you look forward 2 years with your Kenyan shilling, you'll get 700 basis points improvement and all the rest of it. They're probably quite wary about that. So how do you manage that for our clients, our issuers on the platform, and in mining companies in general?
If I can just jump in there, I think, the way AFEX works across the company is that every client we work with gets at least one client manager. Depending on which product suite you use, you may end up working with 2 or 3 dedicated account managers. You'll have that person's direct dial, mobile, email, and they talk you through every step of the process. So they'll lay out in black and white, in words and figures and graphs, all the potential outcomes for each activity, and they'll talk you through it in detail. And they'll make sure that there's no nasty surprises in how these products play out or anything like that. Trevor on our advisory desk is fully regulated by the FCA to offer real-time advice. AFEX as a firm is FCA regulated and approved. And like I say, we've been doing this for 40 years, and many of our clients, as we build up long-term relationships with us, start to view us as really as an extension of their finance team. They pick up the phone, bounce around ideas. They say, look, we're going to do this raise for a project in South Africa, and we're going to need mostly dollars, but then we need some rand, and then we've got equipment coming out of Australia. And we get out ahead of the problem, and we map the process out, and we work with them to use strategies and products which are appropriate to them. The example Trevor talked about is when you're hedging into exotic currencies, and it is just an example of some of the values we can bring, as you described, Rich, to companies that are more focused on mining and exploration, and where their expertise are more focused towards geology and mining and exploration. And we can bring the finance expertise to really work as a partner in the field to make sure that the project hits its revenue goals and manages its expenditure targets.
So going back to Trevor then, what specific hedging products and strategies are there that would work well with the mining, with these mining projects we have Verigold, for example, to have their project in Panama. Okay, that's linked to the US dollar. But then we have other, Oriole, for example, one of our clients is working in Cameroon and Senegal. Now that's going to give different challenges.
Yes, very much so. And this is where the individual account manager comes in and basically drills down for everything. We could suggest, if you want to hedge, if you think this is going to be a long-term project for you, then you could hedge out to start off with for 12 months. And I would actually suggest, when looking at the state of the UK and what could happen with the pound, then actually that really does make sense. Because if you think about it, when you're looking at sterling dollar, which is in the 134 at the moment as we trade, you might be able to get something a lot better on your forward price, for whichever currency you're after for 12 months. Let's say there is a no deal. Now you've locked in basically, for sort of 6 or 12 months, a really good price for sterling, and then you can review it. You can, keep in touch with the marketplace with your account manager or whatever. And after 6 months, if you decide that actually you'd like to take some profit, or you're going to receive some repatriation funds, then you can hedge from there. So that's a really, really good example there of how you could actually, use that 6-month forward, go from there. I mean, Alex, do you have anything to add on that at all?
But I think in terms of strategy, to go to your example, Rich, of Verigold, and euro dollar, we've seen euro dollar at the beginning of the year trade. I think it was down at 106, and now we're over 120. So obviously clients want certainty, which is why they hedge. But if you'd hedged at 106 in February and now we're trading up over 120, you'd be kicking yourself, which is why it's really important to build flexibility into your hedging. You can do that in a number of ways. Sometimes product, a huge amount of our options products are risk management tools, but they do provide flexibility to allow you to take advantage of positive swings in the market in your favor in certain circumstances. And also in the strategy you use, which is not hedging all of your exposure, leaving plenty to the spot market depending on your risk tolerance. And again, that's the decisions like that we help you make. Obviously, clients themselves can only decide where their risk tolerance is, but we can help them have those conversations, and then we can build relevant strategies and bring relevant products to the table that meet that criteria.
Okay. Well, that's Alex Wright and Trevor Charsley from AFEX. I hope that's helpful to our issuers and our investors alike. A little bit of a teaching then to FX and how we link with our platform partners here at NR Private Market. We'll do another session, probably with the lawyers or the insurance brokers or someone else, just to help our issuers and help the mining companies along the way as they're thinking of expanding their projects and moving forward. Gentlemen, thank you very much and have a good day.
Thanks,
Thank you, Richard. Nice to talk. Take care.